Ladies and gentlemen, good day and welcome to Premier Energies Limited Q3 and FY25 earnings conference call, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mohit Kumar from ICICI Securities. Thank you, and over to you, sir.
Yeah, thank you, Mano. Good evening. On behalf of ICICI Securities, I welcome you all to the Q3 FY25 earnings call of Premier Energy Limited. Today, we have with us from the management, Mr. Chiranjeev Saluja, Managing Director, Mr. Binay Rustagi, Senior Director, Investor Relations, and Mr. N.K. Khandelwal, CFO. We'll begin with the opening remarks from the management, followed by Q&A. Over to you, sir.
Thank you, Mohit. Am I audible?
Yes, sir.
Okay. Good evening, everyone, and thank you all for joining us today at our second earnings call for Q3 FY25. I am Chiranjeev Saluja, Managing Director of Premier Energies, and it is an honor to present our quarterly results. I am joined today by my colleagues, Mr. N.K. Khandelwal, Group CFO, and Binay Rustagi, Senior Director. Premier Energies has clocked another quarter of outstanding operational and financial performance with excellent revenue and earnings growth. For Q3 FY25, the company has achieved a total revenue of 17,494 million as against 7,147 million in Q3 FY24, marking a 144.76% year-on-year increase. This growth is driven primarily by robust demand from the domestic market, reflecting growing demand for solar power across different segments. Our exports for this quarter were 3.44% of revenue, and on a year-to-date basis, 2.11%. Operating EBITDA for the quarter stood at 5,135 million compared to 1,232 million in Q3 FY24, exhibiting a growth of 316.49%. Operating EBITDA margin improved from 17.30% in Q3 FY24 to
Ladies and gentlemen, the line for the management is disconnected. Please wait patiently while we reconnect. Okay, sure. Ladies and gentlemen, we have the management line back with us, and over to you, sir.
Sure, thank you. So I was on operating EBITDA for the quarter. It stood at 5,135 million compared to 1,232 million in Q3 FY24, exhibiting a growth of 316%. Operating EBITDA margin improved from 17.30% in Q3 FY24 to 29.97% in Q3 FY25. This improvement has come from our continuous focus on operational excellence, strong customer connect, and cost optimization, our ability to efficiently ramp up capacity and meet the rising demand. The PAT for the quarter is at 2,552 million, showing a year-on-year growth of 490% in comparison to 432 million in the same period last year. PAT margin improved from 6.05% in Q3 FY24 to 14.59% in Q3 FY25. The proceeds from our IPO have significantly strengthened our balance sheet. Our net debt to EBITDA ratio has fallen from 9.51 to 3.49 compared to the same quarter of last year. We are maintaining a net cash positive position for equity investment in our expansion projects. We remain very optimistic about solar sector growth prospects in India and worldwide. The sector is poised to grow strongly, aided by rising demand across all segments, favorable government policy, and improving technology. Our expansion plans include a 1 gigawatt TOPCon cell and module line expected to be completed by Q1 FY26 and a 4 gigawatt TOPCon cell and module line expected to be completed by Q1 FY27. With these facilities, our total capacity would reach 7 gigawatt per annum for solar cells and 9.1 gigawatt per annum for modules by June 2026. Simultaneously, we have planned further backward integration into wafers with a 2 gigawatt per annum facility, which is coming up, and also this is targeted to be commissioned by FY26. Our aluminum frame manufacturing business with a 36,000 metric ton per annum facility to meet our full captive needs and to increase our share of total value addition and profitable margin. We remain focused on achieving timely completion of new projects, which makes us well placed to benefit from the growing solar power demand. We are constantly strengthening our technical and operational capabilities to deliver value-enhancing opportunities to our stakeholders. I look forward to sharing more details of our progress with all of you in years to come. Thank you, and we are now open to questions.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handsets only while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have our first question from the line of Deepak Krishnan from Kotak Institutional Equities. Please go ahead.
Hi, sir. Am I audible?
Yes, Deepak, you are audible.
Yeah, congratulations on a good show. Just wanted to sort of understand first on margin performance. So obviously with the LCC cell mix is favorable as well as utilization has gone up. But anything else from a cost perspective that would sort of work as a lever for us in this particular quarter?
I think it's mostly operational efficiency and plant utilization. You see a significant uptake in the plant utilization factor. Cell plants take time to stabilize, as I've told, and as we keep running them, the operational efficiency goes up. And this is what you're seeing in utilization capacities.
Sure. And maybe just wanted to sort of, maybe this is for NK sir more, just wanted to understand, so if I look at Q2 versus Q3, our other expenses was closer to, about 193 crores last quarter and has come down to about 107 crores this quarter. So, which number is sort of a more normalized number to sort of look at from a regular basis, and anything either in the base quarter or this quarter that you want to sort of call out as, some gain or, maybe the previous quarter at some heightened provision or anything of that sort? Anything that you would like to call out?
Ladies and gentlemen, please stay connected. We have dropped the line for the management while we reconnect them. Ladies and gentlemen, the management is back with us.
Apologies for this call getting disconnected. So Deepak, your question was on the other expenses, right?
Yes.
Yeah, so I think we had explained in the last quarter that we had kept provisions for warranty, which was a provision put in that quarter, and hence you see that difference.
So I would say this quarter number is a more regular steady state number to kind of take going ahead.
Yes. Yeah.
Sure. And maybe just wanted to look at the order book as well, the 69 billion order book that we have.
Yes.
What would be the sort of, because if I sort of take a 15 cents realization, I roughly get about 2 gigawatt of module and 2.6 gigawatt of cell, similar to the number that you've indicated. Any rough timeline in terms of when this entire book will sort of get executed?
Yeah. So most of the orders are, having a cycle of not more than 12 to 15 months. In our investor presentation, we have also shown what the order book was in September and what is the volume sold in the new orders. So you see a positive uptake there where the volume sold was 17,110 million as against an order book of 22,399 million.
Sure. Maybe just one final question. How are the sort of DCR module and cell prices trending on a QOQ basis? We see there is a certain uptick on the cell price front, but maybe not that much on modules. Just wanted to sort of reconfirm that.
So there's not been a significant uptake as such. Prices are quite stable and the demand also is very, very strong. So we are not seeing any significant change as such quarter on quarter.
Sure, sir. Those were my questions. I'll get back to the
Thank you, Deepak.
Thank you.
Thank you. We have our next question from the line of Aman Jain from Bernstein. Please go ahead.
Yeah. Hi, sir. Congratulations on the good set of numbers, and thank you for taking my questions. So I have two questions. First, rooftop solar. If you can give some color, how much is it contributing to our domestic sales?
So you're talking about the rooftop solar market, or in terms of, as far as we are concerned, whether it's rooftop solar or it is Kusum, it's a DCR product, which is a domestic content requirement product. The DCR rooftop demand also is increasing. I think Vinay can throw some light on the size of the whole DCR program. Vinay? Vinay, are you there?
Hi, can you hear me?
Yes.
Yes. Yeah. Hi. Aman, so, just to kind of give you an idea about the rooftop solar market size, the PM Surya Ghar Yojana has a target, we believe, of about 25 to 30 gigawatts to be implemented by FY26, although we think that scheme might kind of just roll over for 1 or 2 more years. This year, so far, we've already seen 8.5 lakh installations. We expect the annual pace to pick up to about 20 lakh installations over the next year onwards. So that should be a market size of 6 to 7 gigawatts in the residential side. On top of that, I will add, I would say, about 2.5 to 3 gigawatts on the corporate side. So we do expect the rooftop market alone in India to touch about 9 to 10 gigawatts over the next 1 to 2 years.
Yes, so of our current sales, how much is it contributing to rooftop solar? I mean, of our domestic sales currently, how much is going to rooftop solar in terms of percentage or any figure that you can give?
So it's very difficult to track that because we sell solar panels to various integrators. But if you ask me for a number out of our DCR sales, today rooftop could be around 25%, but it's significantly growing.
Got it. Thank you. And my second question, in terms of order book, in terms of execution, if you can give some color. So supposedly by the time of delivery, if the input prices go up, so how the order book is executed? Is it indexed to some variable, and do the customers have an option to exit? Is it binding? If you can throw some color over there.
So most of the contracts which are signed by us or in the industry, most of these orders are wafer variable. If it's a non-DCR, it is a cell variable, and it's mostly on a dollar cent. So even the currency is variable. So I think 90% of the industry works on this. There are some small spot orders where you don't have this. So most of them have the variable contract.
Okay. And do the customers have an option to exit, or orders are binding?
So it depends. The customer, if he's entering into a long-term contract, then he will, based on the contract, have an option to exit or to continue. So it depends from customer to customer, based on volume, based on the tenure.
Ladies and gentlemen, the line for the management got disconnected again. Please wait for a while. Ladies and gentlemen, we have the management back with us. Ladies and gentlemen, we have the management back with us. Over to you, sir.
Yeah. So, Aman, as I was telling you, it depends on the tenure of the contract, the quantum, the advance which we have got from them. So it depends on the contract. If it's not a very long contract, and if it doesn't have significant advance, then of course they could back out. But most of the contracts which we have signed are all firm contracts. The order book which you see in the presentation is firm with advances received. We have not taken any framework contract into our order book.
Got it. Thank you so much, sir, for your answers. Clear. Thank you.
Thank you. We have a next question from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Good evening. Thanks for taking my question.
Hi, Nitin.
Hi, sir. So just first question on the order book, because it has been a very strong order intake. How has been, I'm sure you must be doing that checks where the land bank has been given or not. So in the current order book, how's your assessment in terms of, the developer land bank is pretty much is owned with them, and how much is your visibility there? That is first. And second, with respect to inquiries, as you started the call saying there are a lot of inquiries happening and demand is pretty strong. Can you throw some light across segment with respect to DCR? Because if a developer is bidding today, he must be keeping in mind that he has to take the cell from the domestic player as only. So in that context, the question was more that are there more capacity have come up recently? Because we don't see much capacity on the sell side coming up. I mean, except you, which you are saying you will commission in Q1. So, just to get a little bit sense on the pricing side, if demand is so strong and not much enough capacities are still coming on streamline, though everyone is talking about it. How do you see that scenario over the next 1 or 2 years from the capacity angle as well? Then I have 2 more questions. Thank you.
Sure. So, Nitin, first is on the developers. We generally work with large developers. Most of these developers are backed by large fund houses, and of course, we do our due diligence to ensure that even developers themselves would make sure that they have everything in place before they place order for modules or get into contracts, because modules is the last thing to come out of the site. Yes, there are issues in some places where the goods are ready and the sites are not ready. So this is an ongoing process, but it's not a significant issue for us. And we do take care to ensure that the developers are also on track with their EPC and their land progress. Coming to the DCR demand and the capacity, we are seeing substantial progress with the demand from the government side. I agree with you that a lot of cell lines are not coming. It's not easy to set up cell lines. This is what we have been, saying from the starting, that it's not easy to set up cell lines. But then there are companies which have been working on it. So Tata has already come up. Waaree has announced trial runs for their cell lines. So this is work in progress, and we feel that this should not be a challenge with ALMM list 2 coming up in June 26. But then yes, not all lines would come up. Not all announcements would be successful. But then we are seeing a positive direction that people are announcing, and work is in progress.
Got it. Just last question on this global front. I know there are a lot of noises happening with respect to Trump removing the Inflation Reduction Act and IRA for the renewable as well. Can you throw some light that, let's say before the IRA, how much the industry used to do there on a rough sense, because we get this number closer to about 30 gigawatts, sort of. You can correct me if I'm wrong. And when we look at the capacity, cell capacity only for US, because he's already banned China, Mexico, and other countries. Only for US, though there are a lot of announcements, but when we look at the commission capacities, it's hardly in numbers. So if you can correct me on that.
Trump has put a pause on the IRA. He's not cancelled it. And second is, I think we need to give time to the new regime in the US to settle down. I think we do understand that there are, did the line get cut again? Able?
No, you're audible, sir. Please go ahead.
Yeah. Yeah. So we need to give time. We are also navigating issues, but what we need to understand is we as a company, our year-to-date exposure on US market is only 2.11%, because we have a better realization and we want to focus more on country rather than company.
Ladies and gentlemen, the line for the management got dropped. Please stay connected. Ladies and gentlemen, we have the management back with us. Over to you, sir.
Yes. Could we get the question, please?
Sir, basically, the question was more on before the IRA,
Yes, we were talking about the IRA. As I said, before the IRA, what we have seen is, as you said rightly, manufacturing capacity in the US has come up into 25 to 30 gigawatt for modules, but for cell, the capacity is insignificant. We are aligned with you on that, and which also means there is a good opportunity for export to the US. And the IRA incentive, which has been paused, only delays manufacturing to come up in the US. It doesn't reduce the market size as such. So there is a demand in the US, and US has been doing about 20-25 gigawatts year on year in terms of deployment. But I think we should wait and watch, and it doesn't affect us as a company. But we will be monitoring the situation, and this is the reason why we have kept our cell line investment in the US under review, because we will wait for clarity before we spend any money on the cell line.
That's helpful, sir. Thank you very much. I'll come back in the queue.
Thank you.
I mean, just to add to that, of course, the cell capacity in the US is very, very limited. but then you have the thin film module maker for solar, which has a capacity, I think, of more than 10 gigawatts. So there is some supply which is coming from First Solar obviously.
Got
Sure.
it. That's it. Thank you.
Thank you. We have our next question from the line of Nidhi Shah from ICICI Securities. Please go ahead.
Thank you so much for taking my question. I would also like to congratulate you on a great set of results. My first question is that we know that the ALMM one is to be implemented from June 26th, but has the process of collating the list started, and by when can we expect the list to be out, and what would the process look like?
So, do you want to take this question, Vinay?
Yeah, Chiranjeev, I can do that. So no, the process has not started. I think we will see a growing number of capacities come online over the next year or so. Typically, the process of enlistment and approval for ALMM takes anything between 3 to 6 months. Given that the whole process is expected to kick in from June next year, we expect the government to start collating this data sometime towards the end of this year.
Okay. Thank you so much. My last question would be that the 1 gigawatt TOPCon line, I can see from your presentation that we have delayed the commissioning by 1 quarter. What is the reason for that, and are we facing any delays or issues in getting equipment and things like that?
So no, we are not facing any issues in getting equipment. There has been a marginal delay. Originally, we had said March of this year. We are now expecting it to happen sometime in around mid-May or maybe end of April. So we have, to be transparent with the market, shared the revised marginal delay.
All right. Thank you so much, and all the best for the rest of the year.
Thank you, Nidhi.
Thank you, sir. We have our next question from the line of Sanjay Mukim from JP Morgan. Please go ahead.
Thank you. Good evening, Chiranjeev and everyone.
Good evening, Sanjeev. Yes.
Good evening. A couple of questions on the numbers, Chiranjeev. If I read the presentation right, there's been a sharp increase in the net debt number QOQ. Could you talk us through that?
So I think the net debt number would have gone up because of the deployment of the 1 gigawatt facility, right?
That is,
NK can take this question.
Yeah, so there is an increase in net debt number primarily because of the method of calculation. Earlier, we had actually not reduced the IPO proceeds also, but that was not a correct depiction. So this time we have removed IPO proceeds from the total, not removed IPO proceeds from the total debt, because it is for a project-specific requirement.
Sorry, just to clarify that, Mr. Khandelwal. So when you say your net debt number is 1,917 odd crores, you probably have IPO proceeds of 1,200 crores. So if I were to subtract that, the net debt is somewhere around 700 crores, right, on a balance sheet basis?
Yeah.
I see. And you've been advised not to remove that cash? I mean, I've not seen this before.
No, because it is raised for a project-specific requirement, and it has to be parked as separately for usage into that particular project. Last time when we released the numbers, that time we had reduced it from the overall debt. So there is a difference in the method of calculation of net debt.
Okay. If I may just follow up on the detail a little bit, Mr. Khandelwal. This money was received in the early September, right?
Yes.
But if I look at the net debt, if I look at the presentation, the net debt end 1Q and net debt end 2Q is flat. I mean, that should have gone down if you had added the money from the IPO, no?
Which one? Q2 and Q3 you are comparing?
Q1 and Q2, Mr. Khandelwal. Q1 and Q2.
Q1 and Q2.
Yes, if you had added the IPO, yes. Shouldn't Q2 have gone down a lot?
42 versus
1,017 at the end of Q2. Yeah. So if you had added the IPO money back then, shouldn't Q2 number have been much lower?
No, we had not added it.
No, we had not. No, we had actually reduced last time. So it was coming negative, I think. Just to see this, right? It was negative. Last time it was negative. That's what you are saying, na? And this time it has
should have
gone
been.
up.
Yeah, the slide says it has went up between June and September, the net debt number, even though you're saying that the IPO money was added, which you have now removed.
Okay, let me take the numbers correctly once again, and then I'll come back to you.
Sure. Thank you. The second question, again on the detail, the depreciation seems to have gone up noticeably QOQ. Has there been some commissioning?
Yeah, so I can answer this question. The depreciation again has been a management call on the terms of the life of the equipment, in terms of technology, in terms of raw material availability, and management has taken a conscious call on depreciation numbers based on the equipment.
So you've reduced the useful life assumptions, is it?
Yeah, it's so based on useful life, on technology, on availability of raw material. So a lot of factors have been taken into while arriving at this.
Right. Thank you, Chiranjeev. Just one question on the ALMM list too, in follow-up to the earlier query. If the list is not yet ready, but I understand that people who are now bidding will have to incorporate DCR requirements, how does a developer decide who to buy from? If the list will not be ready for...
So developers have already started contacting cell manufacturers, and developers are also talking to companies who have announced cell manufacturing. And it has been a very clear direction, unlike the ALMM which was announced for the module. This time the ministry has been very clear that please take into account that you have to use cells made in India and appropriately bid for the PPAs. So developers have understood this point, and they have been discussing with manufacturers like us, and accordingly putting in their bids for the PPA.
Right. And so this is on the assumption, Chiranjeev, that any developer will make that if you are making in India, you will be on ALMM list too.
Yes. If you are already a cell manufacturer, then obviously we'll be in the list.
Okay. Thank you. Those were my questions. Thank you very much.
Sure. We'll come back to you on that question which NK is just checking.
That will be very useful. Thank you.
Sure.
Thank you. We have our next question from the line of Gopal from SBI Life Insurance. Please go ahead.
Hi, sir. Thanks a lot.
Hi, Gopal.
Yeah, one of the question was on this net debt only. So whenever you are able to clarify, please clarify on that.
Yes.
And second one, in this current order book, what will be the export percentage?
Our export percentage is going to be limited to 3% because, as I told earlier, we are committed to Indian market, so we will be restricting our exports, even though there is a significant demand from the US. But the management by choice is very clear. Their focus is dedicated towards Indian market, and there is a very strong demand here, so we will limit it below 3%.
And we had a plan to invest in the US for cell manufacturing and all.
Yes, we still have this plan. We have just put it under review because we are waiting for the regime in the US to settle down and be clear on what they want to do. As of now, we have only heard and read that IRA has been paused by the Trump administration. We are hearing a lot of statements, but we still do not have clarity. And as a company, we have taken a conscious decision not to move ahead until we get full clarity on this topic.
And sir, on order book side, would you be able to give some color in terms of breakup between module, cell, and EPC?
It's already given in the presentation. I think about 30-odd% is for cells, which is already shown in the order book. 36% is for cells, 1% for EPC, and 63% for module. The module order book would also include non-DCR and DCR modules both.
Okay. And so this order starting point of September 24 is 6,400 crore.
Yes. And then there is a...
Even 6,200 crore order book.
Pardon me? Could you repeat that?
Last quarter presentation, it shows 6,200 crore order book.
Okay, let me just check that number in the last presentation and come back to you.
So that was one. And second was just I'm sure that's a very crude way to calculate. I was just calculating the average per megawatt on order book, but this is like down by 2-3% quarter on quarter. So there is no change in the pricing, is what we have mentioned.
So there is no significant change in the pricing, which I had answered this question earlier also. The market looks to be quite stable. In fact, in the non-DCR segment, there's a slight increase in the pricing because of duty imposed on glass. So overall, the pricing has gone up a little bit in both DCR module and non-DCR module, because glass duty has been a pass-through for us, and hence there is a slight increase rather than a decrease. And even in China, we are seeing now prices have started going up. They were at all-time low. We are now seeing an increase in prices in China. So the gap between Indian modules and Chinese modules is gradually reducing because China has now started increasing prices.
And sir, in terms of revenue mix, this 25-30% from cell, this is the right assumption to take for next year, or it will increase in the financial year 26?
So it depends. It's market dependent. As of now, this is what is shown in the order book matrix. But yeah, it depends. It could change.
Okay. And would you give some guidance on EBITDA margins for 26 and 27?
Sorry, could you repeat that question?
EBITDA margin guidance for FY26 and 27?
As a policy, we do not give any guidance. You have been seeing our performance, and the company and the management is all working towards the best performance. We generally do not give any guidance as a board policy.
Okay.
And the question on that order book, I think that was not for 30th September. That was for it was for November first week. It was not for September, the number which you're seeing.
Okay. Sure, sir.
The 6,200 numbers was as of November, not September. Yeah.
Okay. Sure, sir. Thanks a lot.
Thank you. We have our next question from the line of Mayur Patel from 360 ONE Asset Management. Please go ahead.
Hi, thanks for the opportunity. Great set of numbers, Chiranjeev and the team. So just one, most of the things got covered. Just one question: 6,900 crores of order book. So shall we assume that this is at the current? So like you delivered around 30% margins in this quarter, and it's a function of whatever cost, but also a function of the price of modules in DCR and non-DCR and the price of cells, which goes largely in DCR. So it is. Shall we assume these orders are also at the current price? And if you want to model it accordingly, earnings for next year, we can do it that way.
Again, it would be a guidance for future, so I'd like to avoid that. But as you see, quarter on quarter, we have been in the range of between 25 to 30, as what you have seen in today's results. That could be an indicator, that we'll be in this range.
Okay, got it. Fine, thanks. I don't have any other questions, and all the best, Chiranjeev. Again, very strong set of numbers. Thank you.
Thank you so much.
Thank you. We have our next question from the line of Gurneesh. Please go ahead. Mr. Gurneesh. We'll move on to the next participant from the line of Piyush Seval Dasnani from Sundaram Alternates. Please go ahead.
Hi, sir. Thank you for the opportunity and congrats for a great set of numbers.
Thank you, Piyush.
So my first question is on the raw material pricing. And on one of your slides, you mentioned that the Chinese pricing is further going down, but I think to the previous participant, you mentioned that we are seeing that it is again going up. So just wanted to understand that is it a complete pass-through for us, or would we have an impact in the near term?
Yes, as I said, almost 90% of our order book is pass-through. There are some orders which are spot order, but otherwise, when we sign up any contracts for DCR cell, the wafer is a pass-through. When we sign up contracts for DCR module, there again, wafer is a pass-through. And when we sign up non-DCR orders, the cell is a pass-through. So, and this is an industry norm. It's not something which Premier is doing. Because of the volatility, it's generally a pass-through.
So my next question is on the depreciation. I understand that I think 1 gigawatt of cell and 1 gigawatt of module is getting commissioned in first quarter. Can you help us understand what is the amount of what is the amount that will be capitalized?
I'm not able to understand your question. Could you repeat it because your voice is smudging? Could you repeat that again?
Sir, 1 gigawatt of cell and 1 gigawatt of module, I think, is getting capitalized in the first quarter. Can you help me understand what would be the amount that would be capitalized and useful life for that?
So it's a TOPCon cell line. The 1 gigawatt of cell line, the spend budget is, generally it's about 600 and odd crores for cell line. Could you give the capex numbers for 1 gigawatt of cell and 1 gigawatt module? And then module is about 175 crores.
And useful life, what would be?
So generally, being a TOPCon line, we generally take useful life to be about 5 years. We generally depreciate our equipment in 5 years. Sometimes even earlier, management takes a call based on the useful life of the equipment and on technology. But generally, we take 5 years. The total investment, the numbers which you were talking about, is the 6,694 million for cell line and 1,523 million for module line.
Sure, sir. Thank you. That's it.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to take questions from all participants in the conference, please restrict yourselves to 2 questions per participant. Should you have a follow-up question, we request you to rejoin the queue. The next question is from the line of Shivanshu Gupta, an individual investor. Please go ahead.
Hi, sir. Am I audible?
Yes, you're audible, Shivansh.
Yes. Hi, sir. I am one of the investors from IPO. Thank you for taking my question. I wanted to understand in terms of capacity utilization in the slide 21. So, leaving aside the new capex plans, are we at a peak capacity utilization for cells and modules?
For module, there is still some scope, but for cell, we are almost at the peak in this quarter.
Understood. And for the order book guidance, sir, you said most of it is domestic, over 95%?
Over 97% is domestic.
Understood. Yeah.
So as a company, we generally are below 3% for exports. Year to date, as of today, is 2.11%.
Understood. Thank you.
Most welcome.
Thank you. We have our next question from the line of Swati Junjunwala from JM Financials. Please go ahead.
Yes, thanks for taking my question. Sir, on exports, I think I missed it. Do you see exports to go very big now that, what the global environment is like? Or do you expect it to stay at this level? Because on a YTD basis, we've degrown by close to 70%. So that's my first question on exports.
Yeah. So as I have stated earlier, that we as a company have taken a conscious call that we want to serve the country first, and we give priority to domestic orders. And our focus has always been to make sure that we are, making the products available for the government-sponsored projects in India. That's a priority for us. All our capacity expansion is also planned keeping in mind the domestic demand. So as of now, this is where our focus is. We want to retain, ensure that our exports are not more than 3% on an annual basis. But going forward, as capacity is built up in India and maybe the demand in US is very strong, we would take an appropriate call at that time.
Understood. And sir, second on the net debt part, I think I understood what the delta of that 1,291 crore was versus, in Q2, what you had reported versus right now. Just wanted to understand if you are not deducting the IPO proceeds from the net debt as of now, what does it, what does the debt pertain to? Since that 1291 crores is for a specific project. So if you could just break down the net debt if you could. Because optically it looks like this 1900 crores should come down by 1291 crores to give us sort of 600 crores net debt. So
yeah, I think we had parked this question for our group CFO NK to come back. We will come back to you on this question.
All right. And lastly, on order book, so could you give the order book number of last year December, that is 2023 December, Q3 FY24?
I have to pick out that number, December 23 order book number. Yeah, we will make a note of this and we will respond to you.
Sure. All right. Thank you.
Thank you. We have our next question from the line of Akash Mehta from Canara HSBC Life. Please go ahead.
Hi, sir. Congratulations on a good set of numbers.
Thank you so much.
Yeah, so just one question. In terms of the new cell and module capacity, which is kind of coming through of 1 gigawatt each, how do you see the ramp up happening? Will the cell capacity kind of take a similar timeline in terms of ramping up in terms of utilization, or it will be faster than what we have seen previously?
No, so we will of course replicate or be a little better than what we have done in the past because of the experienced team and the 14 years of knowledge which our team and our company has on cell manufacturing. We have projected that we will be able to commission and ramp up within 3 months of commissioning. We are looking at a mid-May commissioning and ramping up our production within 3 months of that, and then. Of course, it takes time. We would not reach 96% in the first quarter. It's going to be gradual. But we will try to better what we have done in the past. It should be better than that.
So, we can see at least, more than 50-60% up post after 1 quarter. That's what we can.
Yeah, of course. 50-60 is a safe number to assume.
Okay. That's it from my side. Thank you.
Thank you.
Thank you. We have our next question from the line of Chaitanya Junjunwala from Grow Mutual Fund. Please go ahead.
Yes, sir. Thanks for the opportunity and congrats for the great set of numbers.
Thank you so much.
I had a question on the provision side. So basically, last quarter we had taken a ad hoc provision for the warranty right. So I wanted to ask whether we are taking this provision regularly because every module.
No, we are.
But every module that we manufacture has an inherent provision for warranty, right?
So it depends. Some customers opt for third-party insurance where warranty is already covered under the third-party insurance program, and some don't. So management had taken a call for that provision in last quarter. We do not need to put in a similar number every quarter.
Okay, sir. Understood. Thanks a lot.
Thank you. We have our next question from the line of Bharani from Avendus Spark. Please go ahead.
Yeah. Good evening. I'm just trying to understand.
Sorry to interrupt, sir. Can you please be a little louder?
Is it better now?
Yes, I can hear you.
Yeah. Sorry. Yeah, so I just want to understand the rationale behind the basic customs duty cut the government has done on cells and modules and how it will, if any, impact our prices.
So we don't see any change in the customs duty. I think what the government has done in the recent budget is that the duty on cell remains as to what it was. It has just been bifurcated. I think I'll leave this question to Vinay. He'll be able to answer this better. Vinay, on the customs duty, please.
Yeah, sure. So as Chiranjeev said, there is no effective change in the level of duty which has to be paid by the importers. All that the government has done, they have reduced BCD on various items to basically cut the number of slabs of BCD. This is some kind of a tax reform. But all the reduction in the BCD that you see on cells and modules is basically offset by an equivalent amount of levy of an agricultural cess. So effectively, the total amount of duty that the importers have to pay remains the same, which is 44% net on modules and 27.5% on cells.
Okay. So essentially, the impact on our say attractiveness from price point of view compared to China, remains the same before the announcement.
Yes, there is no change in the economics either for the buyer or for the seller. It is just a definitional tweak in terms of how the different duties are structured and named. Sorry.
Sure, understood. My second question is kind of numbers I want on demand in say India and USA. So apologies if it is basic, but could you spell out what could be the annual demand for modules from India, and if you can split that between DCR and non-DCR, and what could it be in US?
I think Vinay, you should take this question also.
Sure, Sanjeev. So if you see the historic numbers, India did a record capacity addition of about 24 gigawatts AC in the last calendar year, that is 2024. That is equivalent to a total demand of about, I would say, somewhat north of 30 gigawatts over the year. We expect that number to grow by about 15 to 20% year on year over the next 3 to 5 years. So we are basically looking at a module demand of something close to like 50 gigawatts during this period. And in the US, the scenario is not so clear because of the policy confusion and whether IRA is applicable, which parts of IRA remain applicable or not. But the annual demand in the US has been about 25 to 30 gigawatts over the last few years. And this year onwards, we are not very clear. We kind of are waiting for the policy clarifications to emerge, only after which we can know about likely demand from the US.
Okay. Follow-up to that question of the 30 gigawatt annual DC demand, how much would be DCR, how much would be non-DCR?
So if you look at the market on an annual basis, currently there is, I would say, looking at the new year 2025, we expect about 5+ gigawatts of demand, DCR demand, to come from the residential rooftop market. We expect, I would say, between 8 to 10 gigawatts of demand to come from the KUSUM market, the agricultural solar market, and a few more gigawatts to come from the PSU market and some specific projects of the government. Having said that, if ALMM is implemented from next year, June 2026 onwards, as the plan is, then the entire market is going to turn into a DCR market in a matter of less than 1.5 years.
Sure, that is clear. I'll fall back in the queue. Thank you so much.
Sure.
Thank you. We have our next question from the line of Prateek Kumar from Jefferies. Please go ahead.
Yeah, good evening, sir, and congrats for great results. My first question is on your order book. So when you say order book, what defines it? Is it the advances or is it some kind of MOU? How do you define your order book?
Yeah, so let me clearly state that all our order book is firm order book with advances received. We never, as a policy, put in anything in the order book which is even a framework agreement which can be cancelled. So it's all firm order book, contract signed with advances, and it's not a framework or an MOU.
Right, and these advances will amount to like how much percentage of the value of the product?
Generally, it depends from contract to contract. It would anywhere range between 5% to even 20%. So it depends on the quantum. It depends on the delivery timelines.
Sure. My other question is on your, the technology transfer from China. So you're talking about 2 gigawatt commissioning of wafer and maybe like looking for more projects in that segment. But is there any technology transfer issues which have been like sort of talked about in media earlier from China in this segment?
So yeah, we have also heard of some issues. Our wafer manufacturing is with a Taiwanese partner, so we don't have a technology issue here. But yes, we have heard of certain issues on equipment supply from China. There are certain vendors who said that, government is really pushing for not selling equipment to India, but you could sell it to any other country. Then there are certain vendors of equipment in China who say we have no problem. So there is no clarity on that. We have not faced any significant issue, and we have been getting our equipment, and we will navigate issues as and when they come up, because a lot of equipment suppliers now in China are setting up shop in Vietnam, in Malaysia, in different parts of Southeast Asia. And I think we don't see a major threat there as of now.
Thanks. And my last question on ALCM. So June 26 is the timeline, but ALMM like got delayed by 1 year because of non-readiness for the industry. So the capacity additions for cell remains low at this point. Is there any chance of like the ALCM also getting like sort of delayed if the industry capacity is not online?
I would not say no. There could be a possibility that the ALCM gets postponed by 6 months, but that would not mean any kind of exemption. It would only be an additional timeline given to developers to commission their projects, because the government has given clear, been very clear in their GO that they have to consider Indian-made cell.
I mean, just to add to that, ALMM1 obviously was a new policy and created a lot of confusion in the market and disruption for both module suppliers as well as for the end customer, that is the IPP. And I think what has happened is that the government has got a lot of feedback from the market or stakeholders on implementing ALMM2. And they have issued a much clearer set of guidelines on how this is to be implemented, including, for example, for saying that all projects which have been bid after December 2024 will have to comply with ALMM2. So there is a pretty forward-looking guidance. There is also a reasonable confidence that, given all the plans by all these companies as part of the PLI scheme or otherwise, there'll be, there is a significant amount of capacity addition coming on the cell side. So, obviously one can never rule out whether the policy, what will happen to the policy in future, but we expect a much clearer thinking on part of the government and not to have anything like the kind of confusion that we saw with ALMM1.
Sure. Thank you, sir. These are my questions.
Thank you. We have our next question from the line of Subramanian Yadav from SBI Life Insurance. Please go ahead.
So just wanted to understand on the capacity utilization of the cells. Why there has been a sudden increase from 77% to 96%, and how sustainable is this 96% number?
So 96 number is sustainable. As I've told earlier, cell lines take time to stabilize, and it's a process-driven industry. And there is another reason for these percentage of utilization to go up also, because China has moved from M10 wafers to M10 plus, or what they call is the M10R wafer, which is a larger format wafer, and hence the wattage output what we get from the same wafer is about 4 to 5% higher than what a normal M10 wafer would give. So this also contributed in the utilization, because you're seeing the utilization in percentage, but in megawatt terms, every cell on an M10 wafer is slightly higher on the watt peak compared to an M10 wafer. And our guidance is that this will be now the norm, plus or minus 1 or 2% is what we are going to be achieving.
Okay. And what about the module, sir? From 74 to what would be our peak in that?
So on module lines, we have seen that, you need to actually change the product mix. People are still buying different watt peak of modules. Some people are, there is a demand for monoperk and TopCon, and then somebody wants glass and somebody wants monofacial. So when you do these changeovers, you lose efficiency in a module line, but based on customer orders, we need to do that. So module line is a different beast compared to cell line. And because in cell line, you're just producing one format of wafer continuously. And then you keep, so module line also we see that there should be a little bit of increase, but it will not be so significant.
Okay, fine. But we can take a sustainable
And
number
also
of
in
75%.
cell line, if you see, our number had dropped from 82 to 71, and then it's gone up to 77, and it's gone up to 96 because the format of the wafer changed.
Okay.
So when the wafer format changed, it took time to stabilize the lines again.
Okay. So sir, this wafer change would be happening frequently, right? Then it would be very difficult for us to maintain this 95% capacity, right? Utilization?
No, I would say no, because in this format, if monoperk, this is what is the norm now, M10 plus. Beyond this, if there's any change, it will only happen in TopCon lines.
Okay, fine. And sir, on the module front, what would be peak utilization?
We are estimating it to be around 80-82%.
82%. Oh, thank you, sir. Thank you very much.
Thank you. We have our last question from the line of Vipra Srivastava from Phillip Capital. Please go ahead.
Hi, I'm audible, right?
Yes, you're audible.
Right. Two questions, sir. Firstly, on why the gross margins have declined by 300 bps for this quarter, QOQ.
Just a second, please.
Sure.
Which slide are you referring to in the presentation?
No, I'm talking about gross margins, sir. It's the, if you calculate gross margins after subtracting cost of goods sold, the gross margins. So it's 38% for this quarter. It was 41% for last quarter. Roughly. So it's roughly a 300 bps decline. Yeah.
Yeah, so you're talking about material margin, is it?
Exactly. Yes.
Yeah. Could be because of various factors. We'll have to come back to you. The forex has gone up, and also material movement. Raw material prices. Sometimes, in some cases, there is volatility.
Okay.
It's not give a correct number quarterly because
is there
raw material prices on a weighted average basis. Yeah.
So is the trend in cell price declining in this year because your cell mix has also gone up QOQ? Because of that, has the gross margins come down?
So cell prices in DCR market are not declining. They are similar to what they were. There could be a change of maybe, 2% here or there. There's no decline we are seeing in cell margin as of now.
Sure, sir. And so last question, one of your clients, Shakti Pumps, in the con call has been highlighting that they could be facing slowdown in PM Kusum because of shortage of DCR module plus very high DCR module prices. So any thoughts on that?
So DCR module prices went up slightly because of the import duty put on glass. And this is something which was a pass-through for all our customers. And, because of the glass duty, these prices have gone up by almost about 80 paisa, about a cent per watt. And I think Shakti has even updated something today, if you would have seen that they have secured a substantial portion of their DCR requirement. And they, of course, continue to buy from us. Yes. So, which is positive for them.
Right. But you don't see a slowdown happening on PM Kusum because of this? I mean, thoughts on that?
No. So, what has happened is I don't see any slowdown. The problem with PM Kusum scheme, unlike the Surya Ghar Muft Bijli Yojana, is generally the PM Kusum scheme is dependent on the tenders which have been coming out by the respective states. And we have generally seen that all, these kind of projects, there is, not a stable demand every quarter. and
Sure.
everybody wakes up in the last 4 months, right? And everybody wants to achieve the maximum what they can for the funds to be utilized before they expire in March, and then they are reinstated. So we have seen this issue come up only in the last quarter. A substantial portion, a lot of our customers who had signed annual contracts from us failed to buy the material what they promised in respective quarters by over 15-20%. It didn't matter to us because there was a lot of demand. And then suddenly in the last quarter, there has been an unprecedented demand because everybody wants to catch up. So I don't see any shortage if people plan properly and deployment happens. Now this is not the case in PM Kusum because PM Kusum is spread over individual customers, right? And they are not running under the pressure of receivables from respective states, and projects slow down because of this, I think. So they are two different programs. But we don't see any stoppage. There is substantial availability.
And so lastly, so because of the Shakti pumps thing, you don't see any issue with receivables. Can that be a problem if their execution doesn't happen? Can that be a potential problem?
So the demand is so high that I don't see that as a problem at all.
Sure.
And even government has, I think, Vinay, you could throw some light on the payment process mechanism, which the government has made some great efforts and great improvement. Vinay?
Yeah,
on the
sure.
Kusum payment.
So actually, the payment provisions in Kusum scheme have been substantially improved now. The central government makes monies available subject to the state government putting up their share of the funds, which is typically 30-30 or 30-40% of the total project cost. I'm talking about solar pumps. So the state governments have to put up their money up front. And the vendors, if I remember correctly, get their money within a set timeline, which is typically 45 days, within 45 days of installation. So the payment process has been, completely rationalized, and we hear no complaints about the vendors, getting stuck with payments with any of the state governments.
Okay. Sure, sir. Thank you. Thanks a lot. Thank you.
Thank you. As that was the last question for today, I now hand the conference over to the management for closing comments. Over to you, sir.
Yeah. So I'd like to thank the ISEC team and everybody else who joined the call. Happy to see a good participation and also individual shareholders joining. We are committed to deliver, the best what we can for the shareholders, and we will continue to, be very agile and, looking at the situation in the market, navigate accordingly. So thank you so much, everybody, and a good night.
Thank you, sir. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.